So before we get started, how many of you here have actually used either a stablecoin or cryptocurrency and sent it across to someone else? Okay. How many of you have sent it to someone who's in a different country? Amazing. Okay, well, this will make the pitch easy. Well, so those of you who raise your hands, I think there's kind of a truth that we all know who've done it, which is like when you actually have to go send an international bank transfer, it is literally like dial-up internet. So that's obviously one of the props of crypto payments, and today we're going to talk about the different parts of it. Now, of course, it's not all roses and rainbows and sunshine, at least not yet. And that's because there's still a lot more to be built out within the crypto payment stack. And today, each of our panelists are founders who are working on improving different parts of the crypto payment stack. So from one-tap payments for cross-chain transactions to payment infra, to recurring payments, to accounting and bookkeeping. So we kind of covered the whole spectrum. And we're going to explore each aspect of these solutions today, and together imagine the future of Web3 payments. So with that, I'm going to hand it over. I'm going to do brief intros on the panelists, name what you do, and I'm going to start from Dan and then go this way.
Awesome. Hi, everyone. My name is Dan Motais, and I'm the founder and CEO of Ansible Labs. Ansible's platform enables instant crypto to USD conversion. So we've connected blockchains basically with various traditional financial systems to allow for what looks like a bank transfer to occur, i.e. you send USDC and that value instantly converts into USD and ends up in a bank account. So that is relevant for consumers and businesses. And then we additionally have a platform through which developers can add that capability into their tool set.
Hi, I'm Eleni. I'm one of the co-founders of Loop Crypto, and we help simplify crypto payments. So what that means is the missing piece, at least as we see it, to crypto payments is there's no programmability. You can't say, I want to schedule a payment on this date, or I want to pull a payment on this date. And so what we have is the tooling and smart contracts that companies need to do just that.
Hey, I'm Will. I'm co-founder and COO at Decent. At Decent, we're building one-click checkout for any chain. So our flagship product, the Box, enables single-click cross-chain transactions, meaning users can pay with any token on any chain at the point of sale. And we do all bridging and swapping in the background, completely abstracting that process from the user, and ultimately delivering them whatever they are purchasing on the destination chain. So.
Hey everyone, I'm Kareem. I'm the founder of Entendre Finance, for building AI accounting for and bookkeeping for Web3 finance teams. So whenever a business is dealing with crypto payments and any of these amazing platforms, we're here to help manage and wrangle in the financial statements and month-end processes for you.
And I'm your moderator, Catherine Wu. I'm a venture partner at Archetype. We're an early-stage crypto-focused venture capital fund. I'm also one of the elected meta-governance stewards for the ENS DAO. So before we get into the specifics, let's start with a general question. I want to know what your respective aha moments were for starting the company or being the space that you're currently in. I'm going to start also with Dan and then kind of go the same order.
Awesome. So prior to founding Ansible, I worked at Visa for a long while in building cross-border payment systems. So initially got into crypto when I realized that Visa, the biggest card network in the world, struggled to move liquidity around the world, given the fact that it's ultimately reliant on wires at the end of the day. So I got into the crypto scene because of that and kind of began thinking through how large-scale payment networks could begin utilizing stablecoins and public chains to move money. And so joined the crypto team after that and was working there for about a year at basically the peak of the last market cycle. And basically everybody and their mother was coming to Visa and saying, okay, well, value's accruing on chain now. How do we get it out? What do we do with it? And so it's kind of like this so what statement that was occurring in the last cycle, whether that be in crypto payments and gaming and DeFi, across any of the use cases that we're all excited to continue to build in. This thesis that became off-ramp was very much in focus for me personally. And I decided to jump out and kind of solve that myself. So as I said, we've kind of begun in the US to facilitate instant cash out. And the goal with time is to connect blockchains into what we call the best of traditional rails. So RTP, in the future FedNow, things such as Visa Direct and MasterCard Send, but things that allow for you to instantly convert cryptocurrency or stablecoin value back into traditional currency in systems around the world.
Thanks, Ann. So I guess my aha moment is my co-founder, Shane, and I were working at another crypto company, and they were trying to charge a subscription. And they did what I think a lot of companies at that time do, is we use Coinbase Commerce, which is really like a very nice front end that shows you a wallet address. And you ask your customer basically to come back to your website every single month and send you money. And as you can expect, churn is double when you do that compared to what you do in Web 2, which is you get their credit card information and you bill them. And the aha moment is we realized the missing piece in crypto payments is automation, right? In Web 2, you connect your bank account to, let's say, a Rippling to automate a pull every month to pay your employees. Or you ask a customer to connect their credit card so you can bill them every month. And so what we build is literally just that, but for Web 2. Again, it's the tooling that you need to get that authorization and then pull funds or schedule sending funds every single month.
At Decent, previous to the single-click cross-chain transactions, we actually, a little over a year ago, deployed a multi-chain NFT protocol to Arbitrum, Polygon, Optimism, and Ethereum. And our aha moment for building in the cross-chain transaction space was this spring. We had a few million NFTs minted through the protocol. We had users that were trying to get to the right tokens on the right chain in order to mint these NFTs that were being created. And we were talking to creators, collectors, even other builders in the space, and ran a survey. And over 80% that responded said if they didn't have the right token on the right chain when they went to interact with an application or buy an NFT, that they would actually walk away from that transaction rather than going and doing a whole bridging and swapping process and then going back. And so we were initially building what has become the Box, our developer tool for these cross-chain transactions, for ourselves, as a sort of earned insight through our NFT application, and through this survey, through talking with others, realized this was a ubiquitous problem across the space as the volume of and fragmentation of activity across new chains and new ecosystems was growing. And so that led us to continue to solve for how do we make navigation between these ecosystems, how do we make transactions as easy, as usable as possible, to really unite, again, the ecosystem rather than, or to solve the liquidity fragmentation that was seen with the growth of activity on L2s.
Yeah, so my aha moment, I think, kind of started a little bit farther back. I've always mulled over this issue around accounting and bookkeeping for businesses. I started my career at Workday building, accounting products there at a very big enterprise level engineering team, and seeing the evolution of startups and my career go. I worked at several high growth companies afterwards. And one of the biggest blockers as a payments product person was how do you, account for this? The finance team having a consistent back and forth struggle between what product wants to do and just the financial health of the business overall. And so, I did, work at WeWork at the peak valuation through the SoftBank takeover, and then I later, joined, another high growth startup, Cloud Kitchens, and one of the issues that we were facing was how do we do better for our restaurant partners. And so we were mulling over a ton of different financial products. And one of the things that we were trying to pitch was the adoption of stable coins to undercut the card networks and improve the margins of these very low margin businesses and helping out these entrepreneurs on that level. And so right before my departure and founding Entendre, it was really one of the biggest things was, well, how would a very complexly structured business that's super high growth and global, like a Cloud Kitchens, be able to account for crypto. We built all of our internal, platforms there, and there was no real good solution. And then it was also kind of around the intersection of the democratization of AI and language models. So to me, it was just like, it just felt like the right next step to not just help, restaurateurs, but to help all crypto companies and all of the people they want to serve maintain their financial health and scale without having to necessarily have like a 200, 300 person accounting team, like we had saw at WeWork at the peak.
Okay, now turning the questions to specific individuals. So I'm going to start with you, Dan. So Ansible's target customers are businesses that need real-time, reliable access to USD, and you also build for developers via your product Beam, who, for developers that want to offer this to the end customers. Through your experience building on Ansible so far, to what extent do you think the future of crypto payments have to start from scratch entirely, or do you think it kind of also relies on participation from incumbent solutions?
Yeah, I think given the fact that we started with off-ramp, we're hyper-reliant on incumbents, without a doubt. It's been a difficult year in that regard, but we've been very fortunate to have kind of established the infrastructure that we have, and are kind of newly establishing trustworthy payment flows that are kind of re-entering the financial system through our off-ramp flows. So I would definitely say hyper-reliant, and I think one thing that I've found helpful is actually to reorient the discussion away from kind of this on-ramp versus off-ramp dichotomy and more around this theme that is interoperability between traditional systems and blockchains, and kind of the best of traditional systems like RTP, like FedNow coming soon, and like the RTP or real-time payments for those that don't know what that acronym means globally. So there's UPI in India, there's PIX in Brazil, there's FAST in Singapore, there's a whole host of RTPs that are popping up all over the world that are becoming competitive domestically with the card networks, and none of them have been really stitched together. And so I think there's definitely something that's fascinating as to how you can weave together kind of traditional domestic schemes and make blockchains the kind of interoperability layer between those. And again, you have to play nice with the various incumbent solutions to kind of prove to them that there are trustworthy flows that can be built on top of these systems, and plenty of regulatory frameworks and kind of compliance approaches that can be taken from traditional payments, especially within traditional cross-border payments, and then applied to cross-border on-chain payments to allow for this whole kind of space to take off together and allow for more seamless, efficient money movement to occur. So I think that's when things get really interesting. I think as it relates to your comment on an international wire or SWIFT, kind of with Beam, for example, one could send money in USDC from any bank account or even Gnosis safe in the world directly into Beam. We can convert USDC into dollars and then initiate an RTP, and that fiat or traditional money will arrive in a bank account pretty much instantly, which is leaps and bounds better than SWIFT. So if you kind of put your thinking caps on around kind of that orientation and think through what's possible if you begin to connect all these fast systems, again, things get really interesting.
I actually read a stat this morning around, just to your point, crypto and how much it plays with incumbents. Stable coins, the reason, there's a bunch of reasons why it's seeing great adoption, but also incumbents actually offering those stablecoin products is a huge onboarding point also for crypto users. And so one of the stats I saw this morning, so last year, stablecoin settlement volume reached $9 trillion globally. And just to put that in perspective, last year Visa settled 10 trillion. So we're almost on par with at least one of the rails. So anyways, I thought that was an interesting stat.
Yeah, definitely. And yeah, the other thing I'd say is that the banks, the big networks, though they might not be saying it right now, are very much taking stablecoins seriously. And outside of kind of net new, crypto native payment solutions, there's again, so much efficiency that can be realized at the kind of underlying network layer, especially as it relates to cross-border settlement. Because what a lot of people don't really understand or know is that at the end of the day, what Visa uses to settle the value around the world is actually still SWIFT. And it's sending JP Morgan wire instructions every day. And so in a world where cross-border money movement can happen 24/7, 365, and not be constrained by bank cutoff times, funding windows, et cetera, that are kind of hyper regionally dependent, et cetera, things again get really interesting. And you can kind of imagine this like breathing machine of liquidity around the world that is no longer reliant on holidays or things along those lines. And it's actually kind of an online synchronous systems that can match the synchronous processing system that have been built out over the past like 40 or so years.
I mean, any of us who've tried to send a wire between Christmas and New Year feel that. So on the theme of simplifying payments, I think Loop's like one-liner is literally Loop simplifies crypto payments. And I think you touched on it a little bit earlier, but I wanted to dig in a little bit on why it's so challenging for crypto businesses to accept crypto payments.
So,
or just businesses in general.
yeah, so the missing piece to this puzzle, as I mentioned, is the auto pay or the ability to schedule or pull payments. But the other missing piece, which something like Entendre helps out with a bit, is there's no metadata. Someone sends you money and you have literally no idea who it's from or what it's for. And that becomes an accounting challenge for a company that maybe is generating invoices, or for a company that is trying to permission someone into their system. So you can imagine you go to Masari and you buy their product. They need to know who bought the product and if the payment settled on chain so they can let you in, right? And if a bunch of people are buying at the same time, they have no idea who's who. And so the other thing that Loop does is we help give you that metadata and send you webhooks and allow you to build automations around on-chain payments. And so the good thing there is, well, one, you can let someone into your system because you know who paid you and what they paid you for. But two, you save yourself a bunch of time at the end of the year when you're trying to open and close your accounts receivables or reconciling your payments. And so, like I said, like companies like Entendre, we do integrations with so that if you're a crypto company and you're trying to close out your financial statements, you can just get all that data straight from Loop because we know it, opposed to what people do now, which is like save it in a spreadsheet, like a bunch of transaction hashes, or you're like following up with your customer and you're like, was this you? Did you send it to me? And what for? And so, again, we simplify it because, well, we just allow you to create automation and then give you the data that you need.
Tell me more about your customer segment. Like, what are the different use cases specifically that you're seeing your customers use Loop for?
Yeah. So, like, this is the Web3 payment stack. Like, Dan will touch the fiat, which we will never do. But what we help is from crypto to crypto. So one big customer segment is developer tooling, right? If you're a crypto company, every company needs nodes. You need an indexer. You might also need something to check your smart contract. And so if you're a company operating the space, like you might have raised capital in crypto and now you want to spend it because, well, there's a tax implication if you off-ramp it, right? Or maybe you got debanked and like you can only have crypto. Another big segment is what we call data providers. So you might be a DeFi trader living, outside the US and you want to buy Masari to get some data analytics. Or, I don't know if that's me. Or maybe you want to buy Nansen for the same reason. So that's like a great example of a cross-border payment. It's someone who lives, breathes, earns in crypto and wants to spend within that economy. And then I would say the last bucket is companies who are paying contractors or employees or invoices. Again, those tend to be largely cross-border payments. Let's say they have a global employee base. The company's in the US, but the person that they're paying sits in Europe, right? It's just easier, faster, quicker to pay them in crypto than it would be to like earn in crypto, off-ramp, send them, dollars. They probably have to convert to their local currency. I mean, doing it this way is just faster, cheaper, more efficient.
Yeah, I mean, the use cases are endless. And actually, the ENS DAO uses Loop to pay our contributors. And when you think about a DAO that, like to your point, has global contributors, you pay them on a bi-monthly schedule. Like, we use Loop to do that. Right. That goes to like 20 people every month.
Right. And then you can schedule those payments. So, the one person doesn't have to remember at the end of the month to pay everyone and coordinate a bunch of multi-sig signers because, if someone's offline or in another time zone, like the bill doesn't get done. But with Loop, you can just come and set up those payments, get the approvals up front, and then they'll execute on schedule.
Okay, now switching to you, Will. So Decent's new product, the box, one-click checkout. And for those of you who like have tried this, you know how painful it is to like, you log into your wallet, you're trying to do something, you're like, oh, this is actually on an L2 or this is actually on another chain. And you're like, okay, now how do I go and switch that? The process currently is what, 20 steps?
It's a lot.
Yeah, a lot, too many steps. And the box literally simplifies all of this for the users. How do you think, this is like less a question about the product and actually just a question about your view about how do you think about like, or how did you think about building for the multi-chain world? And how do you choose what L1s or what L2s to build on?
Totally. So, quickly to Catherine's point, if you've tried to go and purchase an NFT or, either even just bridge and swap tokens between chains, that process, if you're on an application when you realize that you don't have the right token on the right chain in order to do something, you have to go to multiple third-party sites. There are, over 10 clicks that you have to make, countless points of attrition, and it takes up to 30 minutes on average just to go through that entire process. And with Decent, with the box, at a point of sale, anywhere to make a transaction within an application, it's completely abstracts bridging and swapping. That process goes down to settling in 5 to 20 seconds with a single click.
Will, tell me how many percentage of users just like rage quit the process if they can't do it in one click?
Yeah, I think I mentioned this before, but when we've talked to users, over 80% of people have said, especially even going to make an average transaction size just for over our user base, when we've seen people buying NFTs or making transactions, a single transaction, the average size is $8 to $10. And so for somebody to make a transaction of that size, it really doesn't make much sense for them to go through that entire bridging and swapping process in order to just buy that NFT or make that transaction of such a small size. And so that number is incredibly high in terms of the drop off that we've seen. And that's without our product there. The multi-chain, I guess our view on multi-chain, we initially first deployed our NFT protocol a little over a year ago to Ethereum, but also Arbitrum, Polygon, Optimism. Immediately we're multi-chain there. We've always had conviction in the fact that there would be movement of NFT and other on-chain activity to these chains that have lower fees, better application building experiences for developers, and ultimately that create the ability to scale towards a future that I think we all are excited about, which has more people and more usage. And if the last 6 to 8 months, there's been a really big movement towards these L2s. But with the positive comes the negative. And the negative for this multi-chain future and the world we live in even today is this liquidity fragmentation. And so ultimately, what we have set out to do with Decent, with the box, is to unify and make that experience of moving between ecosystems negligible, non-existent to a user. A process that is so easy that you don't even have to, in the world that we want to live in, you don't even have to understand or think about, what chain am I on? What chain is this application on, or am I interacting with? It's not about where the application is built and the destination, but rather meeting the user at their point of liquidity. Where does the user have their tokens, or what are they holding in their wallet? And so how we've expanded, or how we've built so far in terms of the chains that we cover, we have relationships with a lot of these chain teams because generally our incentives are quite aligned, where we make it as easy as possible for a user that maybe has never done something in the Optimism ecosystem, or done something on an L2 before, to work within that ecosystem without having to worry about jumping through hoops of the bridging and swapping process. And so we make it easier for these chain ecosystems to gain volume and gain activity. At the same time, these chains, ultimately are incentivized to, introduce us to the top performing applications, introduce us to people in the ecosystem in order to, really grow that adoption and grow the usability of their tools.
Yeah, I mean, if you play it right, building from a multi-chain perspective can really accelerate your go-to-market. So
absolutely,
cool. Kareem, now I know Tech Week just started. And I'm sure you've already heard the term AI this, AI that, like maybe a million times. And unfortunately, you can't escape that here either.
Yeah.
But not only are we talking about AI, we're talking about the intersection between AI and crypto, which is double buzzier.
Yeah, crazy.
So, but what you're building is literally the perfect solution that sits between the two. So tell us, how does AI play into Web3 payments? And then I'm going to follow up with the use case question, but I'm going to let you start there.
Yeah, absolutely. That's a great question. Okay. I think in the world of fiat, and Dan and Eleni and Will touched on this, is just how fragmented it is. And so from just a pure fintech point of view, I think the thesis generally is ultimately everything's going to move on chain. Everyone's going to be in a completely digital world. You're not going to feel compelled to run payroll off-chain or send wires anymore. It's going to take time, but if that thesis is correct, then yeah, we're all looking at the same ecosystem, the same sets of data, versus me having to jump into Stripe to check my payments, but then look at my bill.com for my accounts payable, and then I have to look at the addenda on bank statements to see who this wire from. So there's all these different things that exist today that probably the next decade won't exist, and that's because of crypto. So then the kind of intersection of AI comes into play when you think about, okay, well, at least from Entendre's point of view, we can automate the accounting and bookkeeping without AI, but then who's actually maintaining the accounting system? And I think one of the biggest issues with anything in crypto is, the back office operational side of it. And that question, I think, can be really solved properly with artificial intelligence. And that's what I think is super exciting. And of course, there's a ton of other projects in the space building really interesting use cases to analyze on-chain data, which is extremely powerful when you think about it. If you have an all-knowing AI, like a Google-level search, and you can, search the chain and get the data you need in real time, I think that's incredibly powerful. And with the, I think you said something like 9 trillion was settled on chain. Like, yeah, that's a pretty hard to ignore financial system.
Just stablecoin.
Yeah, that's just on the stablecoin side. So you can imagine, I think AI is going to be what actually, I think, propels Web3 further on top of all of our efforts. But that's, I think, the overall theme of crypto and AI, and how we're applying it is specifically, with payments as well, is, being able to have, better put, like, we don't think people need to spend a lot of their own time trying to maintain systems. And even if, certain transactional level things in payments or crypto are automated. So
what are specific, I guess, like, with top AI use cases that are different between like crypto and traditional finance, or maybe like what? Yeah.
Especially in finance, traditional finance, it started with on-premise solutions. CFOs and finance and management teams were completely against the concept of storing your financial data, on the cloud, right? It had to be in the basement of your building with your database administrator owning, the access. And then you saw the popularity of cloud-based solutions. And, my time at Workday, I had actually learned that, they had to create pretty stringent agreements on their ability to analyze their customers' data. So AI was actually not in the question. They kind of roadblocked themselves from being able to build anything intelligent on top of their solutions, because you had to make that shift from on-prem to cloud, and you had to convince CFOs that their data was safe and that they're the only ones who have access to it. But then you have blockchain and crypto now, where the difference, I would say, is everyone's data is publicly available. And so that argument kind of falls on its face, and you're now able to build financial tools and provide holistic insights across your entire customer base, your clients, and give them more intelligent feedback, which you couldn't do when you're just in isolation serving them individually.
Keep the mic. I'm going to jump to the next question, which is around user experience.
Yeah.
So what are the biggest criticisms when it comes to crypto and talking about onboarding users? And this has literally been a criticism since I got into the space.
Which was when?
In 2017. Thank you for the question, Will. So the lack of intuitive user experience has been I think the major criticism, like core to the industry. As you're building out your products, how are you thinking around user experience? What are some of the design choices that you've made or challenges you've encountered?
That's a great question, because in accounting, it's typically abysmal. It's very hard. It's very hard to convince creative product people to build accounting solutions. We're very lucky that we have the team that we have. And shout out to our head of design, Andy. He joins us from Hulu. I think from a usability or user experience, I think we all as founders want to build like that minimum lovable product. I think that's an absolute table stakes thing that we have to do nowadays. It's very hard to convince Web3 teams who are building cutting edge tech to use a tool or infrastructure that they can't go to bat for or recommend or refer, right? You want people to be excited about your product just in general. But I think specifically with crypto, and I'm sure the rest of the panel has a lot of feedback on this. For me, call me crazy, but I don't think Entendre should have a UI in the future. So I'm kind of envisioning a world where we slowly start to abstract away all of the manual processes that people go through in the back office side of things, so that they're just interfacing with Entendre's artificial intelligence and can ask it things, have it do things for them without necessarily having to click any buttons. So I think that's kind of the long-term vision or medium-term vision for us. So eventually, everything can just run on Rails. In my view, is probably the best way for us to increase adoption and convert more people to crypto.
User experience, Decent, is really at the core of everything that we're building and that we're focused on. As I mentioned before, we had started building our cross-chain transaction product to solve a user experience problem that we were seeing within our own application and within applications of other people building around us. We have ultimately created and built a tool that is a piece of the payment stack, but really the mission is about user experience. And so there are core pillars that we've focused on within every piece of what we're building around speed, high speed, low cost, high trust, that are the three things that we think about building in the product every day. And one differentiator in terms of what we've been able to build and how some of our backend is architected, for example, is because we started with the idea that we needed to, or that we're building for a point of sale experience that is as easy and as accessible as possible, and that informs everything that we do. And so, starting at the point of sale and working backwards rather than starting from a general cross-chain messaging system and then working up towards user experience has allowed us to build a product that has, really created over a 10x better experience than the current bridge and swap process that's already out there.
Let me turn it too. Well, I have a hot take on the user experience, which is if it's so bad in crypto, but we're all still using it, that must prove that it's solving a problem that is, 10x better than traditional Rails, which I clearly is the case if there's $9 billion worth of stable coins being settled, even though trillion. Even if bridging and swapping is hard, and getting a MetaMask is hard, and getting on-ramped is hard. I mean, we're all still doing it because it's cheaper, faster, borderless. And so while I do think user experience is important, it clearly is not the end-all, be-all. And I think the paradigm shift and what makes it difficult in crypto is you're your own bank, right? A lot of the user experience that you go through in Web 2 has a bunch of intermediaries that custody your funds, or that have more control over the process, and so they can provide you a better experience because they're in control. But in Web 3, you're in control, which means as a company, we have less levers to providing a good experience because, well, I'm dependent on you to click the right button and send the right transaction and trust my application. We're figuring it out and we're getting better, and I'm confident we'll solve these problems. But at the end of the day, I think the real takeaway and winner here is people are still using crypto despite how hard of an experience it is, and that's a huge win.
So I'm kind of the black sheep here. I run a very regulated business, so we have to do KYC and connect a bank account to it using Plaid, etc. So of course, we did our best to boil that down into as simplistic of a process as possible, but there are certain elements when touching fiat that you need to add to your system so that we can stay friendly with the banks. Anyway, I think our journey as it relates to user experience, we had several iterations. I think to begin, there's a question of to what extent you serve the current crypto power users versus the future state, billion that we all are hoping and building for in the next, 5, 10, 20 years. And we started by serving kind of purist crypto natives as it relates to the user experience. So connect wallet, go through KYC, use Plaid to connect your bank account, and then initiate a cash out transaction, much like you would initiate a swap in Uniswap. What we realized after a lot of usability testing is that was super unnecessary as it relates to actually getting to the core power that is Beam. And we kind of pivoted our messaging to basically give your bank account a wallet address. And so our user experience now is as follows. You go through the enrollment workflow that I alluded to, but the final step in the UX is basically that you get a unique address that's assigned to you per blockchain. And anytime you want to cash out using that address, you just send an on-chain transfer to it in various different cryptos on various different chains. And that instantiates kind of the instant cash out user experience. And so what we believe is that kind of satisfies both the current crypto native user base of the fact that everybody is comfortable with having a crypto address. But more importantly, what that enables is for all the developers that we work with that are all working on this abstraction layer and the new application layer on top of L2s, et cetera, they can hide the Beam address behind the scenes, and you can add a cash out button that would be as easy to use as basically the cash out button in Venmo. And it's up to them if they want to completely embed it or if they want to expose crypto native functionality. So it kind of comes down to the developer's ideology and the building team's ideology as to what extent they abstract the crypto away, and we're supportive of all the above. And again, that applies to kind of any use case across the ones that will eventually need off-ramp.
Okay, last question for everybody. So for aspiring entrepreneurs out there, for the investors out there, I want to talk about the opportunity set that still exists within the stack. And obviously, aside from Ansible, Loop, Decent, Entendre, let's talk about some of the other opportunities, maybe things that you wish existed as you're building out your own products. What are some still unexplored opportunities to build or that can be built within the crypto payment stack? I'm going to start with you, and then I'm going to move it this way.
For us, and this is very biased by what we're building, but the biggest issue that we face is liquidity fragmentation, but it's a different definition of that. And it's more so liquidity fragmentation as it relates to stable coin to non-USD pairs. So USDC to Euro or USDC to GBP or whichever other you select there. I think to get to a world in which we do have liquidity pairs like that, we need incumbent support, we need incumbent balance sheets and payment flows to come into fruition. But as it relates to the thing that I wish to exist, I wish that there were effectively centralized exchanges all over the world that offered USDC to Naira, for example, though I know there's issues in Nigeria. But that would make our life a lot easier because effectively that would replicate what we've built in the US and allow for us to use that without having to go establish local market connectivity to the banking infrastructure, regulator buy-in, et cetera, which takes a lot of time. And honestly is better suited by people that are local in market and know how to kind of do business there better than someone from the US would know how to do. But yeah, I think that's our biggest pain point right now. And then I was told not to do this, but there's a lot of opportunity in compliance still. I think as it relates to anything that touches the traditional system, there's a lot of education that still needs to happen, and unification of compliance tools that do exist that are applied to certain kind of DeFi-only use cases, and almost like this synthesization of various compliance primitives that now exist that can be unified and then sold into larger incumbent institutions.
Just to be clear, you weren't told not to talk about compliance. You just were really passionate about talking about compliance.
Fair.
We love compliance in crypto.
Yes, I do too, apparently.
I guess something I wish existed, and I don't think we're far off from this, is being able to on-ramp onto any chain. Like, it is incredibly annoying that when I have my Coinbase account or my Gemini account, I have to go to Ethereum first and then bridge and swap to some other chain. And for those of you that live in New York, like, you can't get a Circle account. So I can't just do USDC onto the chain that I want. And it would be really great if I could.
Stay tuned on that. We got something coming for that very soon.
I'll be a beta user.
Yeah. I don't necessarily have anything off the top of my head that I guess wish existed at the moment, but maybe some frameworks for entrepreneurs looking to think about the payment stack. The way that we see payments in this multi-chain world that we now live in, and that really is only going to continue to expand in terms of where activity is happening, is a lot of these, or what people think of as payments, in a lot of ways looks like bridging, right? Or how do you move between different areas? And so I think any way to make that process easier, like what we're focused on, I think, I guess in crypto, payments are not necessarily an entirely separate function from just like an interaction with an application. And so I guess in the same way, anytime a consumer has a touch point with the blockchain, that's technically a payment, right? You make a transaction, you pay gas. And so the way that I think would sort of behoove everyone to think about payments in crypto is, how do we make consumer touch points with the blockchain, or any sort of actual action within an application, which would be a transaction or would be a payment, as easy as possible. So really thinking about payments and user experience as the same thing, not as separate things where payments need a better user experience. Because really, for crypto applications and for, I guess, most experiences that you have on the blockchain, sort of payments and experience, I think, are interchangeable, really.
I think something that I think entrepreneurs should look into, I think, are also a lot of at least as it pertains to cryptos, when a lot of these other teams are building such amazing technology, there's a lot of things that get left in the backlog or behind from a pure operational perspective. So things that I think about that come top of mind is, there's a lot of solutions that say they're crypto treasury solutions, things like that, but they're missing core functionality like cash application, cash forecasting, cash positioning. There's your book to bank reporting, a lot of these things that large enterprises, mid-market size businesses do. We are still kind of lacking as an industry, that I think over time we'll obviously solve it, but I think it's a great place to start to supplement some of these really core money movement platforms and subledgers that are being built to solve specific needs. And Entendre is doing some variation of this, because we, as the accounting layer, we're trying to also hold on and be the GL, but there's still a ton of other opportunities within these different disciplines within finance that can be improved and optimized.
Well, we're at about time, so I want to thank the four panelists for bringing such great perspective. And not actually do we cover the future of crypto payments, we did the past, present, and future today. So let's give a round of applause to our panelists. Thank you guys.